Hey everybody, thank you all for being here. Happy Sunday. This is going to be a big one. Happy Sunday. This is going to be a big... By the way, I play the video to make sure my sound is working, so I'm not talking to myself. Thank you again, everybody, for being here. Let's just, as usual, jump in. But today, it is a big one, but we're covering a lot of top issues that you guys are asking about. And it does include some prickly issues, and it does get a little bit political, and it's not for the faint of heart. So this is kind of like a parental guidance up front. Of course, never any bad words, but some things will be touched on, which can be shocking to some, offensive to others. So I just want to put that out there, but I will always answer these questions in a data-driven manner, honestly, openly, and truthfully, without bias. So let's go. First of all, none of this is investment advice. There's a lot of questions about when will such and such an asset get to such and such a price, which is kind of interesting. The very first one is actually one of those questions. So let me make sure I do have my camera working. Yes. Good. I just jumped right in. So very first question is, in your opinion, will GBTC, which is a grayscale Bitcoin trust, ever reach $36 again? That's from Wisdom Hunter. So this is kind of a relatively easy one to answer, but I'm going to get a little bit tinfoil hatty towards the end of the answer. First of all, if we look at the chart, you can see a couple of things pop up here. In the past, when Grayscale Bitcoin Trust was above $36, this typically was when Bitcoin was above 40,000. That's a 2x from where Bitcoin is now. But the real issue is Bitcoin near 20K and GBTC at $12 seems outrageous. And for Bitcoin to 2x, that means it's going to have to require Grayscale Bitcoin Trust to 3x, because this reflects the 33% discount. You could buy, last time I calculated, one whole Bitcoin for about $13,500, which is 1/3 off the price. Now, digging into this a bit further, you can see by my estimates, if the discounts remain the same, the price of Bitcoin for GBTC to hit $36 will be $57,000. And that sounds like a long way off. But remember, Bitcoin moves fast. Yes, it's out of favor right now. Yes, dominance is in the toilet. And a whole bunch of stuff is taking many by surprise. Yes, people are YOLOing into layer ones. We'll talk a bit about some layer ones as well in a minute. But that's just the nature of the beast. There will come a time when the supply of Bitcoin gets so scant, everybody's just going to rush in. We just have to wait for that moment. But it is an exciting one to wait for. Now, a little bit of tinfoil hat. The first one today that I'll cover is perhaps... Now, I'm just guessing here. Perhaps the reason, the discount for GBTC is so high is because they keep on getting rejected for the spot ETF. But I assume Gary Gensler knew of the huge 3 Arrows Capital Grayscale Bitcoin Trust arbitrage, and he wanted to flush it out. So if you look here, there's a Bloomberg terminal shot of their 38,888,888 GBTCs that they have then since been sold. And we don't have a lot of people rushing in to buy Bitcoin or GBTC right now. And this is perhaps one of the reasons, again, tinfoil hat firmly attached, why Gary Gensler denied Grayscale, the spot ETF. So that's where we are until we get back to that market where people want to buy this and it's their only on-ramp without a lot of competition, which they do have, and there's more coming. We will see the discount between that 25 and 33% going forward. And therefore, we will need that 50 to 50K, 57K price for Bitcoin to hit. So next question, this is from MT. What can be done to keep Bitcoin from continuing to be another manipulated commodity? Or is it doomed to never find a true and accurate spot price, just like gold? Fascinating. In fact, there was some other BlackRock news as well that just came out. But let's have a look at gold and what MT is referring to. This is a very simple little chart here from a report that talks about JP Morgan, Chase, and Citibank hold 90% of all gold and other precious metals derivatives. That's the paper stuff MT is talking about, held by all US banks. 2 banks run it all, and they play the whole game. Now, in just one quarter, Q1 2022, you can see here this massive big orange spike. Metals derivatives soared from about $79 billion to $492 billion. And that's 520% increase in 3 months. Did anything happen to the gold price? Not much, not much. Now, who is responsible for this? Maybe this is just a coincidence. This is from Bloomberg a few weeks ago. How the US toppled the world's most powerful gold trader, who was JP Morgan's former gold boss, convicted last week. Again, spoofing the market, manipulating the markets. That's what MT is talking about regarding everything else. Now, we take a step back and look at gold and who actually owns the gold. Central banks hold the gold. They're not people like you and me walking around with gold coins in our pockets. So Bitcoin isn't manipulated the way gold is. But central banks around the world don't have vaults full of Bitcoin, but they do have vaults full of gold for now. And the reason gold is so easy to manipulate is because central banks around the world hold massive amounts of it. It doesn't float around freely. And they are ultimately dictating prices. And this is not the case for Bitcoin. And Bitcoin is not controlled by central banks. And Bitcoin does not have a Federal Reserve, etc., etc. And the other reason as well, we'll talk about as well, there is no hard cap on gold. You don't really know how much there is in the earth, how easy it is to mine. We know approximately how much it costs to mine an ounce of gold. It's about a third of the price of the sales price of gold, etc., which is very much not in line with Bitcoin. But let's jump to Bitcoin for a second. And this is why Bitcoin is different. We see Bitcoin as a transparent ledger technology. And of course, it is evolving over time. But the fundamental value is derived from organic adoption, not central banks holding it in their vaults. And it is there to serve the needs of the people. And the more people it serves, the higher the price will become. No ifs, ands, or buts. Check out my Metcalf's video on Bitcoin pricing. I'll add a link somewhere here. But security, and there's a couple of things to touch on. First of all, security and vulnerabilities of the network measured by such metrics like hash power, number of miners, miner profitability, etc., are all fully transparent. The size of the network measured by Metcalfe's law, node count, etc., fully transparent. Supply dynamics measured by stock to flow, hodl waves, etc., fully transparent. Organic adoption measured by number of users, number of wallets, number of applications built to use Bitcoin, adoption of those applications, merchant acceptance, Lightning Network, and other advances, all fully transparent. And while we can't control what banks do, we can control whether Bitcoin becomes successful or not. And the continuous improvement of these fundamentals is the key. And as long as Bitcoin can continue to improve, these areas will drive the price upwards. Again, it's kind of hard to say that right now. It's been a long bear market. We're down in the doldrums. Not much happens in August, September anyway. But one thing I can assure you, the coming time it will pump, and it'll pump hard. And we just need to wait for that moment. Right now, it's kind of like a sleeping giant. So just sit tight. Next question is from Stephen. With Helium moving to Solana, do you think it's a sign for more chains to follow their footsteps? And if so, who could shift as well? Well, loaded question, tough question. But let's ramp people up as to what the background is of this whole Helium story right now. First of all, why the move? Well, Helium proposes shifting its entire network to Solana blockchain after they raised $200 million. Now, Helium devs are moving because they need more scale. They have over 1 million hotspots today. They need faster transaction speeds. They need higher uptimes, and they need more interoperability with other blockchains. So we're at the stage now where sometimes things grow on their own chain and they just discover they can't scale. So what do? You lease somebody else's application or you use another blockchain or whatever. And that's exactly what's happening here with this particular chain. Now, a little bit about what makes Helium interesting. And I know that not all Helium miners are making money like they were in the old days. It's become very competitive, but it is pretty impressive nonetheless. They do combine the Web3 play, which is the 5G network, plus Internet of Things. And what they're trying to do with the Solana network is the today structure on the blue on the left is what they do. And the proposed thing is to move from proof of coverage on chain is to proof of coverage to oracles within the Solana network. Obviously moving everything to the Solana network. They want to move the HNT transactions and settlement on the Solana network, which will bring a lot more liquidity to HNT as well. Data transfer will move to oracles. Data credit, tokenization, etc. settlement will move to Solana. And everything else kind of remains the same, with the exception of identity management, which also will move to Solana as we go forward. Now, the couple of things that are very interesting before I answer your question, just to make sure everybody's up to speed, is the key partnerships. So you've got Samsung and Qualcomm are partnering with Helium, and you have Dish Network is partnering with Helium as well, because they want to expand and defend their future as they go forward. I think any of these big telco companies, by the way, notice Qualcomm, the founder of Solana comes from Qualcomm. So everything's going to, as usual, there's always connective tissue. But one of the big threats to these companies come forward is, of course, SpaceX from Elon Musk. And maybe they're building up some type of moat to secure themselves so they can at least survive in the future coming. And that is the whole kind of peer-to-peer network 5G infrastructure as we go forward. Again, 5G plus IoT, Web3. Oh, it rhymes. Now, but first of all, don't jump the gun, everybody, because it's still at a proposal stage. But I believe there's a very solid chance it will be approved. And Helium is designed around proof of coverage. And POC, not proof of concept, proof of coverage, tries to verify on an ongoing basis that hotspots are honestly representing their location and the wireless network coverage they are creating from that location. Again, like everything with the blockchain, everything with the network, it needs to be trusted and operational when people need it. And hotspots enable people to operate wireless networks for a very low power Internet of Things devices. And I know that CoffeeZilla did a video of this. It's not perfect, but it's getting there, and it's a very interesting play. And the architecture itself lends itself very well to Solana's network. The consensus mechanism has elements of proof of history, not too far from proof of coverage. And Solana's coming out with their phone and wearable technology as well. And LongFi is perfect for powering this ecosystem. So the synergy could cut both ways as well. And this way, Helium can focus on the hotspots and LongFi and let Solana handle the scalability and execution. So this is a really, for me, as far as I'm concerned, a very exciting use case. Now, the other big thing is regarding price action, because that's very important on this channel. And you can see ever since this announcement, Helium price got smashed. And that was not a good thing. And the team at Helium must be aware, obviously, sometimes the market values layer ones much more than Web3 apps. So, Stephen, in answer to your question, I believe this is a picture perfect use case for a blockchain. And it'll be very exciting to monitor go forward. And remember, the Helium network is still very nascent, has a lot of bugs and kinks to iron out, but having 1 million nodes is pretty impressive, especially if you look at the map in a place like Manhattan. It is mind-blowing. Anyway, enough of that. Next question is from Stepani. How to best trade Sol with my first trade bag as a beginner between the €2 to €3 range? Well, I assume you want to make €2 or €3 a trade. This is the shortest question today. So if you look at the last 5 days or so, technically, this is kind of like a scalping, day trading type trade. The volatility and the choppiness I've been talking about on this channel for months now is kind of the theme of 2022. And I know some people kind of don't like the trading the range, but trust me, it is the only thing you can do right now. It keeps things exciting, and it's a great way to make money. But here, you can make, say, €3. By the way, since the euro and dollar are parity, I can just show the US dollar chart and it's the same thing. So you can buy here at the bottom around $30 and change, €30 and change, and sell at the 33 level when it tops out and drops down again, and buy and sell and buy and sell. That's just 4 or 5 days represented in this chart. And you see the swing up, €3, swing down, 2.5, swing up, 2.5 again, swing down, 2.5, swing up, 175. So just playing the long side, you can make 3, 2.5, 175. Now, what happens when you have these patterns, and this is not playing the long side, just the long side up, but what I'm seeing is the more these patterns develop over 4 to 5 days, the volatility goes down because people front run the trade. Okay, so you got to find another one to fish on afterwards. Sometimes these pots are hot, sometimes they're slow. Today is a hot day for Solana and Cardano and a few others, so you can still make it. But just watch for the top level, watch for the bottom level, and have a good process in place. So next question is another pricing question from Surf Dogali. And of course, none of this is financial advice, as we mentioned at the beginning. I bought Shopify at 52 a couple of months ago. Should I sell now and jump on a faster horse or hold on? Time frame is 5 to 10 years. So I always say keep your tap dancing shoes on. It's a very, very long time frame unless you're in something that is really a 99% sure thing, like a Bitcoin or a Tesla. Everything else, you don't know where they're going to be. There could be an up-and-coming competitor that could absolutely destroy their market. So here, I always had Shopify as kind of my Amazon hedge thesis. I own Amazon. I have a little bit of Shopify. In fact, I just entered recently into Shopify as a short-term trade, not necessarily a hold. Now, let me explain a couple of things that do give me a little bit of concern with Shopify. And this has all changed over the past 30 days. Again, tap dancing shoes. If you asked me 5 weeks ago, different story. But here, the revenue growth rate is solid, but the profit is slowing, which is a problem. So the rate of growth of revenue is still good, but it is slowing down, and so is the profitability. Let's jump to the profitability slide right now. Here you can see the revenue growth is about 23%, but the earnings are crashing off a cliff. And this was some recent announcement that came out from the company, and it has alarmed people, particularly people like myself and analysts. Again, I just got up to speed with it a few days ago. And here you can see the last 30 days, the analysts slated Shopify. We had 45 analysts following it with a rating. And the number of buys, strong buys and buys was 21. Now it fell down to 18. So dropped off a cliff. Also, the number of holds has fell from 22 to 10. And the sells have gone, but the underperform is still there. So again, it is no longer the darling of Wall Street. So with that, if you have your long-term thesis, again, it's a trader's market. Just play the volatility unless you got very big tax implications. But here, the one-year target remains at $78.15. Last time I looked, Shopify is trading about $30.41. So it's under that magical 32 level a little bit. So it could more than double in the next year, especially if the market goes risk on. Shopify will be one of those assets that's bought up. But remember, what I would recommend is layer out on strength as we go up. I would not necessarily sell at this level because I think it's close to the very strong bottom, but start loosening your position as you go up and find things that will more than double over the next 12 months or so. Okay? Hope that helps. Not financial advice. Next question is from Phaser US. And this is one of the second big political issue we'll talk about today. And there was a lot of chatter around YouTube and Twitter and everywhere else about Micheal Burry. As per his SEC filing, he ditched every position he had, both long and short, and he's holding just one stock at the end of Q2, and that was Geo Group. And they invest in private prison system and mental health facilities with a market capitalization of less than $1 billion. What are your thoughts on this? Well, first of all, it's never good to hold all your eggs in one basket. Everybody should know that. But this is what Micheal Burry is investing in. This is what Geo do. They bought 800,000. They did buy, I think it was end of Q2 last year, Q3. He went short against Tesla, and that hurt him. So remember, Micheal Burry is not always perfect. Yes, he did peg the global financial crisis in 2007, but since then his record is not perfect. Nobody's record is perfect, but this is kind of concerning. This is a picture of the migrant children caged in a U.S. detention center back in 2019. They are caged separate from their parents, sleeping on the ground in space blankets. And note, all of the blue portable toilets in this picture, the kids have to sleep right next to them. And this is kind of scary. This is what the Geo Group do. And it is the largest private prison company in the US, and they are the largest contractors of immigration and customs enforcement agency. And needless to say, they are denying inmates of basic needs, food or ward, privacy, sanitation, and more. So pretty scary. And also remember, there's big money to lock kids up. And it's not just the Geo Group. The industry as a whole is kind of shameful. There's a documentary called Kids for Cash, and exposed the private prison scandal where 2 Pennsylvania judges spent decades sending kids to prison for non-violent offenses, and they handed out exceedingly harsh sentences because there's money to be made in housing kids and kickbacks from the private prison system, etc. So it is a very, very terrifying story. And heartbreaking indeed. Let's look at incarceration rates globally. Guess who wins the list? The US has by far the highest incarceration rates in the world. Private prison industry is a big part of the problem with all these kickbacks and corruption behind the scenes. And the business model is to put as many people in prison as possible, because the more customers you have, the more money you make. And it is shocking. Look at number 2 here on the list is Turkey, less than half of the incarceration rate of the United States. So if Micheal Burry likes this type of business, that's fair enough. In addition, he might also be looking out on the horizon, as I am too. So civil unrest is very, very much on the rise. And kids aside, the worst is yet to come. A lot of people believe globally there's a worldwide socioeconomic problem on Earth. Soaring food costs, energy costs, shelter, inflation will probably lead to a new era of civil unrest. These are the countries to the right where there's an improvement, and the ones to the left where there's not. And including some interesting places like Norway, Poland, Kenya, Russia, Cyprus, Ukraine, Nigeria, all deteriorating very, very fast. And we're seeing things unravel in places like Sri Lanka, Peru, Kenya, Ecuador, Iran, throughout different countries in Europe. So there's more discontent ahead, which means maybe Micheal Burry is expecting this and he believes more people will be incarcerated. And also, another interesting thing just to share is 40% of Americans think civil war is likely in the next 10 years. You see a lot of talk about people kind of trying to go off the grid, fighting against the government, hoarding bullets and guns and things. So hopefully this is all wrong. Now back to the stock, Geo, which is your kind of question. When I analyze the earnings and revenue growth has fallen from 2020 down to 2022, and it's kind of rising a little bit, but I wouldn't call it a disruptive stock or an explosive name, and earnings are falling. So between 2022 and the dip between 2022 and 2023, from 23 onwards, the earnings are still falling. So it's not exactly a great place to make a lot of money. And in addition, analysts, there's a couple, two have had a strong buy. Again, the number of analysts following it have fallen off during the summer, but ramped up again a bit in September. And the target price about $13, which is up 50% upside from where we are right now. Would I invest? No. I don't like what they do, and I don't believe there's an upside. So with that, on to the next question. Aaron YJH. I often hear James say the Fed is boxed in. What is the repercussion of high US to GDP? Will it be the new norm? Technically, it could stay like this or continue to spiral. Now, this is a double barrel question. We also have another question from 10. Government keeps spending money they don't have. The IRA, which is the Inflation Reduction Act, the SLF, which is the Student Loan Forgiveness Program, boosting demand-side inflation while the Fed is trying to counter with raising rates. The result is a strain on the debt-based economy, which incentivizes the government to spend more. Is this a death spiral? Well, everybody is kind of very, very concerned and very tuned in. And the type of people that are now interested in this never cared about it before in their entire lives, but now it's top of mind. So first of all, let's look at the Student Debt Forgiveness Act. And again, another warning, third warning of the day. I know people that have student debt, they need that $20,000, but I just want to focus on the numbers here for a second. I have no position on the issue whatsoever, but the I always say forget the Inflation Reduction Plan, or the Inflation Extenuation Act. But the public needs to know this: the nonpartisan committee for a responsible federal budget estimates that the student debt forgiveness plan will boost inflation by 15 to 27 basis points over the next year, as it will lead to an increase in consumption and put upward pressure on tuition costs. That's just numbers. Now, the other thing as well, this is what bothers some people, and the Student Loan Forgiveness Act could result in a $2,500 burden per taxpayer, as research finds. Sorry for the little gap there. This wasn't working. Hope it is now. So everybody has to kick in. You can't just forgive debt and it goes away. Everybody has to hold the bag, as they say. Now, this is fourth political issue of the day. A colleague sent this to me. Make sure your degree has enough value before committing to 4 years in college. If your college degree doesn't produce enough value for you to pay it off, it certainly doesn't have enough value for your neighbor to pay it off. Again, I don't want to offend anybody here, but I do know people that are sending their kids to college. They're doing things like Japanese studies. They're spending 4 years at places like USF, $45,000 a year plus board, etc., etc. It's a lot of money. We're talking way north of $250,000 and 4 years of life gone. And they'll come out of that course not speaking a lick of Japanese and probably end up working, I don't know, some other job. What I recommend is do an EV like you're investing in a stock. Calculate the opportunity cost of those 4 years, the $250,000, and what else you could do with that. Start your own business. I know people, I know electricians and plumbers and contractors that make millions more than vice presidents at Fortune 100 companies. So think about that, everybody. Do what you like, make sure you enjoy it, but don't necessarily spend a fortune, $250,000 plus, and lose 4 years of life at college. Now let's get back to the debt spiral question for a second. And this is courtesy of the Wall Street Journal and James Lavish, who brought it to my attention. The debt spiral. Very quickly, what this graphic entails is debt is rising per acts like the IRA and the Student Loan Forgiveness Act and all the other spending that they have. The cost of debt is rising. They're jacking the rates right now. Spending increases. Debt rises again. Taxes increase. GDP falls. And there's more spending because GDP is falling. And the debt rises and repeat. Again, we're way, way beyond that 77% tipping point. We're now at 130%, and that's a problem. But let's go back to a little bit of history, which many people may not be aware of. I've spoken about it a few times, but it's hard to say. I decided to lay it out with some charts. So this is the 2-year federal funds rate, the 2-year treasury, which I believe which will equate to the topping out of the federal funds rate. It's now at about 3.4%. My bogey amount on the Fed funds rate is 3.5%. We go beyond that, we are going to blow things up. That's always been my thesis. We've got 100 basis points more to go, and I've said that 1,000 times since April 2022. Now, the 10-year yield now exceeds the level of 2018 that markets could not handle. That big gray arrow points to that red line, which is where the markets broke in 2018 after they did a little bit of QT and the rates hit 3%. We are now at 3.4%. We're higher than that. But remember, back then, the debt to GDP was 90%. Now it's 130%, and it's rising fast. And a shout out to Northman Trader as well, who believes the same stuff as well. So the 2-year as well is up 935% in 12 years. We've gone from a very low interest rate environment to a high one in a very short window of time. This is why I believe we could break something very, very fast. There's simply too much debt to service, and it's growing with all these programs. So I don't know. That's my take. Fed are boxed in. If they go beyond 3.5 Fed funds rate, they break stuff. That's it. This is where I think it'll balance out. Watch the 2-year, and I think Lynn Alden actually says the same thing too. Next question is from Postanovka. With all the rumors about stablecoins connected to US dollar, USDC, USDT, and so on, to be banned in EU, how do you see Circle future, and what are your thoughts about it? Great question. So first, another chart. Let's look at the combined size of USDT, USDC, and Binance USD handle 75% of all trading volumes. And the markets in crypto assets, which is the MiCA, which is the proposed EU regulation. One of the provisions is to target stablecoins. And obviously, after the collapse in the crypto market, the European Union government is concerned about European investors. Or are they really? Or are they just trying to protect their own euro hegemony? We'll see. But regulators want to predominate the stablecoins that are USD backed, whereas they want investors to use euros. And I know Circle's looking into a euro-backed stablecoin as well. And the concern is USD-backed stablecoins pose a capital flight risk for the euro. If you look at the weakness of the euro and the parity with the dollar, you could say that's also related to this right now. And this proposed would cap daily trading volume at 200 million euros for stablecoins, which sounds like a lot of money, but it's not actually in the cryptoverse. And this is extremely small compared to the daily volumes of market leaders like Tether and USDC. Both have a trading volume of over 60 billion euros. And again, as we said, 75% of trading volumes is handled by these three. So in short, if it goes into effect, we believe it could cripple the European crypto industry. So the results of the ban, here are three. that we believe could take place if the ban were to take hold. We could see the high price volatility and mass redemptions in the EU in the short term, and in the long term, there will be a lack of liquidity in the region, making it very expensive for investors in the EU to acquire and trade crypto. Second, competition and innovation would be hampered in the EU. Crypto projects will be forced to leave the EU because it will be more difficult to attract liquidity. I know CTO Larson is very vocal about this too. And small crypto projects will face higher barriers to getting their tokens listed, which would slow down the pace of innovation. And number three, the restrictions incentivize investors to move away from regulated service providers in the EU and use unregulated services and services outside the jurisdiction of the EU where liquidity is more abundant. This would effectively compromise the crypto industry in the EU versus other regions of the world. And thankfully, the regulation is still at a proposal at this point, and there are efforts in the industry to shape the provisions a little bit going forward. And there are a number of projects working on stablecoins that are euro-backed, so we'll see. But don't lose all hope yet. I think there are smarter minds in the European government that will prevent it, and there's vocal people, as I mentioned, like CTO Larson and others, trying to get the attention on this issue, so not to break things. And related to that is, it's funny how all the trends are kind of converging. From bubblegum lightning, New York City is supposed to be the financial capital of the world, yet New York State isn't very friendly with digital assets. Do you think New York City will find a way to keep its title, or will decentralization bring the giant down? Sorry. So, great question. So first of all, out of the gate, I do believe the future will be decentralized. No ifs, ands, or buts. Euro is forcing people to be decentralized. New York State is forcing people to leverage decentralized platforms to do what they want to do. Now, in terms of New York City, you're dead right. New York, however, is number 2 after Silicon Valley in terms of the embracing cryptocurrency and blockchain deals, which is impressive. And New York City still has Wall Street and all the traditional financial infrastructure, and that's not going to change. In the decentralized world, however, New York is still among the top. New York is quickly catching up to the Bay Area when it comes to major crypto companies, and you can see it here from the map, the big red dots. Also look at places like Chicago, Miami, Denver, Seattle, LA. They're all kind of popping up, vying for positions, because everybody knows this is going to be a great way to generate jobs and preserve relevancy for the future in the decentralized world. Now, these are the top crypto companies in New York City, and they're all big names that you know: Ripple, Paxful, OpenSea, Gemini, Paxos, NYDIG, you name it. All the main players are kind of there. But what's also very interesting is they were all based in New York City, not in New York State. And as you can see, the crypto community in New York City is well established. And you also have the connection with Wall Street companies pouring money into crypto, and many of them are in this small little region. Now, in terms of the political leaders, there are 2 pro-crypto politicians in New York City. They are, I can't remember his name, Eric Adams on the left down there, and he wanted to get his first paycheck in Bitcoin, and he got voted by embracing the whole Bitcoin platform. But the jury is still out on Adams as the state grapples with the crypto mining ban, which he actually also supported initially. And as we go forward, we shall see. And there's another guy, Andrew Yang. He's a former presidential candidate and a big crypto supporter. And he even has his own NFTs in New York City. But let's talk about politics for a second. This is warning number 5 for today. Buying politicians in New York City. In Feb 2022, pro-cryptocurrency Eric Adams comes out against crypto mining. And that stunned a lot of us. He just got voted into office, was all pro-Bitcoin, and all of a sudden, I hate crypto mining. And people like myself and Pomp were like, what? It's crazy. June 2022, a mere 4 months later, Eric Adams speaks out against proof-of-work Bitcoin mining legislation. What happened? Well, let's have a look at how politics works. Why the change of heart? Money buys love in New York City. And this is by Chris Sommerfeld. New York City Mayor Adams raises cash from crypto executives in the Hamptons amid push for Hochul to veto crypto mining ban. So again, Money buys love in New York. So that was the political story today. Sorry about those 5 pieces. Hope they didn't offend anybody. And some of our new babies that all of you help support. We have 4 new elephants. We have Garzi, who's 10 years old. Remember, elephants live often to be more than 140. Kuvuko, 12. Kasigwa is 13. And Chala, 18 years old. Big thank you, everybody, for that. And remember, if you want a lot of knowledge in a very short window of time and, do be more informed in the markets, especially during these crazy times, subscribe to the channel and smash the like. I appreciate you all, and I appreciate all the mods in the chat. So let's, let me see. I gotta find the questions. Bear with me one more second. Got them. All right. So the first question is from IROC007, the James Bond of crypto. Do you believe the only reason Bitcoin pumped in 2021 is because of Tesla buying and Beto? Seems like metrics mean nothing and we need another similar event. Yet there's so many things that actually happened. I think the catalyst from 30,000 up to 47,000 was definitely driven by Tesla buying Bitcoin. We anticipate a lot more treasuries, but the problem is draconian accounting rules really penalize people from jumping in. I believe the Beto actually put a lid on pricing action. I don't think it actually helped pricing action at all. And in terms of the metrics, again, it's just one of those things, as I mentioned at the very beginning, it's a sleeping giant until it explodes. And if you've watched it over the 5 years, it just goes through those periods. The thing that has me very excited is we're coming to the end of it right now. In fact, some of the thunder is actually being stolen from Bitcoin because the retail investors just want to YOLO into altcoins and layer ones and stuff. We saw that today and yesterday. And second of all, I think if there's no price action, people just lose interest. But it'll come back once it starts going up. People were afraid to buy Bitcoin at 67,000 because they thought it was too expensive. Now it's 20,000. They're still not buying it. So it's just human nature. But once it starts, the number go up trajectory, and no doubt in my mind it will. We'll see. There are some regulatory things going on as well that are putting a lid on things. We also have the Fed putting a lid on things, and that's suppressing the pricing pressure. So hold tight for now, and we do need a catalyst. What that is, I'm not sure. The biggest news of 2022 for me as well was the BlackRock news, and they are making steps. And watch what the whales are accumulating. 100 plus Bitcoin wallets are growing, and retail is shrinking right now. So let's see. Watches in the wild. Aus der Schweiz. Thanks for all the immense work you put into these videos. You may not be 100% right all the time, but you clearly are kind, so dedicated to helping others. Yes, I am. Liebe Gruß aus der Schweiz. Thank you so much. You were very kind. Yep, nobody's right all the time, but and we were hit with very, very unusual circumstances with the cascading liquidations across the whole cryptosphere. Nobody saw that coming until right before it happened. So I shouldn't say that because 1,000 people say, I saw it coming. But anyway, it was just a very, very unusual perfect storm. Not 3 storms hitting all at once, but 20 of them. So 2112 working man, appreciate your hard work, appreciate your Discord inputs and all support. Happy Labor Day. Stay buckled up. Cheers. Thank you. I wish I had some more questions. MT, you're the man. Thank you for answering the question. I have no more questions, so I'm going to ask my moderator to send me a question from the chat. And thank you as well for your super sticker, Matteo Fresco, Jeff Hammer, Sir Winston, Dog1, AC1, Artem, and Mike. St. Jude needs us. Appreciate you all. But I was hoping for a meaty question. Hang on. The nursery. Okay, I didn't realize I have a meeting I need to run to. So my handlers are saying, get off the air. So thank you, everybody. A lot of material. There's 55 slides in less than 35 minutes. So thank you all. Appreciate you. And for those in the United States, happy Labor Day weekend. Enjoy yourselves. I will be online again tomorrow. It's a Monday. Some people take the day off, but not me. Thanks all. And thank you to the moderators and everybody that contributed to our new 4 babies today. Bye.